Hi guys, today we're going to discuss the not trade zone strategy. So, as I have always suggested, whenever you start your trading day, you always need to check what the market is doing. So, overall, we need to know what the market might do or what we might expect the market to do. So right now we have two possibilities. We can say the market made an impulse and then it made a correction, right? That's the first thing. So we might be expecting an impulse. And then the second thing is market might be trying to come all the way down here for a retest. This is also where our order block is, down at this area. So we might be expecting market to come all the way down for it to retest before it can go higher. All right, so as long as you have the long-term time frame or the higher time frames setups in your head, that's fine. Now you can try to use the no trade zone strategy to get some entries and get some profits. Now remember, this is not a swing strategy, this is a short-term trade strategy. You can even use it as a scalping strategy. All right, so let's begin with the no trade zone strategy. To determine the no trade zone, you take the opening of Frankfurt and the opening of London session. The area between those two zones is your no trade zone. All right, so we're going to say we need the 1 hour before London opens, the 1 hour that only Frankfurt is open. Asian closes and Frankfurt opens right at 8 a.m. So from 8 a.m. to 9 p.m., that's your no trade zone. So you use that 1 hour as your no trade zone. So from 8 a.m. to 9 a.m., that's your zone. So you can say, for people who have a different time zone, you can say the 1 hour, the 1 hour candle right before London opens is the no trade zone. All right, so you need to highlight this area. Highlight the 1 hour candle, right? No trades are to be placed in this area. You cannot place any trade in that area, you need to wait. So once you have your zone, right, we are going to check. You have to check. Well, let's highlight our zone first. All right, we're going to highlight our zone first. That is this candle was the 8 to 9 candle. This bearish candle right here was our 8 to 9 candle. All right, so you need to check. Some can measure, but you can also just sit with your eyes. This candle needs to be less than 30 pips for you to be able to place trades, for you to be able to place your stops, so that you can have a trade that's opening. If this candle is more than 30 pips, then that day you do not have a trade strategy or a trade setup on that pair. Maybe you can try another pair, but for this one you would not have one. Right, it's always better to switch to another pair than having to struggle to look for a trade if it's more than 30 pips. The candle cannot also be less than 10 pips. If the candle is less than 10 pips, then it's also a no trade zone because it didn't give you enough range. You need it to have more than 10 pips. Oh, our notes are gone. Okay, I'll write the notes again. So we said NTZ, right, the 8 a.m. till 9 a.m., right, that's the 1 hour right before London opens, right? Then you highlight the zone is your no trade zone. We can only enter a trade out of that zone, right? And then the next thing, for a valid setup, the range, your no trade range, that's the 1 hour candle, should be less than 30 pips, right? For an invalid for invalid setup, the range should the range should not be less than 10 pips and no more than 30 pips. So if this candle is less than 10 pips, then there is no trade for you. If it's more than 30 pips, there is no trade for you. It's better to go to another pair and see if you can find a setup there than having to force a strategy or a setup on this one. All right, so for entries, what you need to do is you have to set your buy stop and your sell stops on the just above the no trade zone. So what I mean is you set your buy stop above and your sell stops below, and you wait. You can open a trade manually. For you to be able to open a trade manually, right, let's say you want to open your buys or your sells manually and you don't want to use the stops and you want to wait and see what happens in the market, right? What I would suggest a setup or some action similar to this. So if you were to wait, you are waiting to see where is the breakout going to happen. For example, in this case, the breakout happened above, right? So if you had buy stops, they should have hit. But if you didn't, then you are waiting for price to come back to retest for it to go higher. So right now you had the breakout, so price broke out above, right, and it closed above, which is a good sign. So if price comes back down like what happened with the next candle, right, it cannot close below the low of our no trade zone. This we can look at it as a retest, right? And if this candle closes out of our no trade zone, then it's okay for us to buy. That's a confirmation for us to buy. But if it closes back in the range, then we need to wait, because that means price might come all the way down to hit our stop loss and even hit our sell stops, or give us the bearish view, or give us a confirmation on the bearish view, invalidating our buy setup. So the candle cannot close back in the range. If the candles are closing back in the range, then you have to wait. There is no trade for you, or you just have to wait until a setup presents itself. So for entries, we're going to say for entries, set buy stops above. You can maybe say 1 or 2 pip above the no trade zone high, and sell stops below the NTZ low. So if you're a person who's going to be setting stops, you set both above and below. So if the market opens up your buy stops first, you delete the sell stops. If it opens the sell stops first, you delete the buy stops. But you also keep the other things that we have talked about in mind. All right, so besides setting up the sales of, please also use your candlesticks knowledge to determine where price might go. Because right now, if you are to look at this price action, right, we can say yes, we had a bearish candle, a strong bearish candle, right, but also an engulfing bullish candle, right, presented itself and it closed above. So yes, we could have expected price to go higher, and it did go higher, but now it did not close. It did not close. It did not close the way we wanted it to close. So if what I mean by that is, if this candle had closed in a similar manner as this candle, or as this strong, right, we could say yes, price is going to continue going higher, but it didn't. So since it didn't, right, that gave price an opportunity to come back lower to retest our zone. So what I always tell myself is, as much as price might give you a breakout like this, right, the most important thing I would say is to wait for price to retest. So if you don't manage to get an entry as price breaks out, right, or if you had not set your stops as price breaks out, then you wait for price to come back and retest the low of your range before it goes higher. So let's say price broke the high and you didn't manage to enter a trade, or even if you entered and you're looking on how to manage the trade, wait for price to come back and retest the low of the range. Something similar to this. As you can see right here, price broke out, but this candle came back inside, and this can be seen as retesting the low of the range. So as long as it closes outside of the range, you can confirm that okay, it was retesting. Then if you are still looking to enter, you enter because it has already retested. That gives us more chances of it continuing higher. So that is one thing that you always have to keep note when you're managing your trade, if one is opened. All right, and then for stop losses, right, for your stops and your take profits, for the stop loss, if price is broken above, meaning that you bought, then you put your stop loss below the no trade zone. So if you were in the trade and you entered right here, you're putting your stop down here, same area you would have put your sell stops. So stops for buys, stops are below the low end. For sales, stops are above the high. So it's basically more like the places where you put your stop orders, you just put your stop losses accordingly. All right, for profits, right, for take profits, this will now depend on how your take profit strategy is. As I've always suggested, we do 10 pips profits first, and then you manage your stops accordingly. So if I was to say take profits, right, let's say take profits 10 pips for first TP, right, let's say 20 pips depending on how many trades you have entered for second TP, right. The moment second TP hits, if you still have more trades, put your stop loss on break even. All right, you can even go as far as 30 pips or 40 pips, or if you have one trade that you are letting it run, you can just keep on moving your stop loss in profit until market reverses back into your range. That's one thing to take note of. Right, so stops, I would say set your stops accordingly, but you should have your first target that can hit quickly, because if you had a 10 pip target right here, right, I'm pretty sure your first TP would have been hit. Maybe you still have your second TP, or maybe when your first TP was hit, you put your second TP on break even, and now you're just waiting to see what price does, because you can still use this area. If you understand it properly, you can still use this area as the day goes on, or until New York comes in another layout or another setup is presenting itself. Yeah, so please keep in note that 2 trades each day. If the first trade hits stop loss, you can still enter. Let's say you bought, but then it hit stop loss, you can still enter the sells as price opens your sell stops, but you can't come back to enter the buys again if price comes back up again. Your 2 setups would have already played out, and if it didn't go in your favor, that's okay. You can wait until the next day, or if it's too early enough, you can use that for the next pay, or for your next pay if there's one with a good setup, right? So I showed you how to set up your level. I told you what to expect. You have your entries, you have your stop losses, and then your checklist should be always check your economic calendar. Always check if Asian session was ranging. If Asian session was ranging, there are chances that market would trend during London or New York. But if Asian was trending, then there are huge chances that London will range. That means there won't be any trade for you. If there is no trade zone, please just go on to the next pair and look for a zone, or for a possible setup on those zones. And make sure that if you're going to use the no trade zone, the area that you are using is not less than 10 pips, and it's not more than 10 pips. It's not more than 30 pips. That way you have a valid zone to use to your advantage. I think that's all for this zone. And try to avoid, or to make sure that you don't force this trade when there's news, because when there's news, market happen to show you other things, and it's not every day that this zone is going to work. Some days it does not work. So keep that in mind when you are doing your analysis, or when you're trying to use this strategy. If you have any questions, please feel free to message me.